This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index is currently at $37,251. Bitcoin slightly up about 2.8% over the past 24 hours, which is for Bitcoin trading pretty flat. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
More than 18,000 Bitcoin worth $670 million left centralized exchanges on Thursday, registering the biggest single-day net outflow in over a month. Crypto exchange BitMEX alone saw net outflow of over 9,500 Bitcoins, according to Glassnode data. Crypto investors seem to have stepped up Bitcoin accumulation, shrugging off prospects of faster interest rate hikes from the U.S. Federal Reserve. Investors taking direct custody of coins is often interpreted as a sign they intend to hold them for a longer term. Thus, net outflows are widely believed to represent bullish sentiment. Outflows do not necessarily imply passive investing. Investors often tokenize coins drained from centralized exchanges on the Ethereum blockchain to earn extra yield. The number of wrapped Bitcoin has increased by 13,000 this year, extending the year-long rising trend. WBTC is the first ERC20 token backed 1-to-1 with Bitcoin and represents the top cryptocurrency on the Ethereum network. Whatever the case, increased outflows mean fewer coins available for sale on exchanges and a better chance of the market going up. All right, joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel. CoinDesk Managing Editor of Technology, Christie Harkin in Toronto, and Managing Editor of Markets, Brad Keoun in Austin. Hello there, Brad and Christie. Happy Friday.
Happy Friday, Christine.
To you, Christine.
All right, taking a look at these outflows. Christie, you said you don't usually comment on price or whatnot, but you found this interesting, the amount of BTC leaving exchanges. So I want to start off with you and how you're interpreting this data.
Well, I'm not really thinking of it in terms of price. I'll leave that to Brad. I mean, obviously, less Bitcoin available on the exchanges will affect the price, I imagine. What I find is interesting is that the BTC is leaving the exchange in the first place, and what that would mean in terms of custody, maybe even what the motivation is behind taking it off of the exchange. Maybe it's a sign that people are learning that they're not supposed to keep their Bitcoins on an exchange for safety reasons. Perhaps people are concerned about even things like what might happen to the Bitcoin that's on the exchange when I move to a self-hosted wallet, and what the future regulation of that could mean. So I think that there are lots of interesting questions that you can attach to outflows and the reason why people take their coins off of an exchange.
And Brad, what do you think this means in terms of people or Bitcoin price specifically? Because a lot of people are looking at that support, that resistance. Does this mean that it could be a bullish sentiment for Bitcoin?
Yeah, I think that's probably the way that most people would read it. I mean, we had that huge sell-off last week, and price went down to, I think, 32,000. And, could be that people think that the worst is behind us now, which is probably a good sign. I don't think everybody's saying that, but it appears that a lot of people might be seeing 32,000 as a good spot to hold, if not buy.
But I hear whispers of a crypto winter from some analysts.
Yeah, I mean, people are talking about it, and people, these memories of the history are very seared into the Bitcoin mentality, because people remember 2018 and how awful that was. And, people weren't even sure if the crypto industry were going to survive at that point. Now it's a little bit different. I don't think anybody thinks crypto is going away, but I think, or Bitcoin, but But people are saying, we could see further price declines. We could see just a prolonged bear market. So that's starting to creep into the dialogue for sure.
To that end, former Goldman Sachs CEO Lloyd Blankfein this week was saying that crypto is happening. Can you tell me a bit about the significance of that? I mean, that's a big deal for traditional Wall Street folks.
Lloyd Blankfein, I mean, he was on top of Wall Street for a long time. I mean, he is plugged into every board member of every company in this country. He can get senior government officials and regulators on the phone. He's super rich. He's got a, perception of being a successful business leader at the very pinnacles of, corporate finance. And the fact that he's coming out and saying that, sort of unequivocally is to me a sign that he knows he's not going to look stupid with all of his pals for saying that. It's kind of gotten the point where he feels safe saying that. It's not a crazy prediction. It probably means he's hearing it from some of his other pals in kind of the Olympus of Wall Street. And he is kind of a thought leader. So, it could be that CEOs who are currently sitting at these big banks are going to kind of scratch their heads and wonder where they are in crypto. So I thought it was a super interesting development.
Yeah, for sure. Christie, you talked about, you thought people were removing their Bitcoin off exchanges because they're perhaps concerned about the privacy. And this week was Privacy Week at CoinDesk. We published a series of articles that were privacy focused. And one article we had was how Binance, Coinbase, and 22 other crypto exchanges handle your data. So, Christie, I wonder what data are people giving up when interacting with crypto exchanges? And perhaps that's why they would want to remove it from crypto exchanges.
Well, I think the narrative has been over the last few years that if you've got especially a significant amount of crypto, you don't want to keep it on an exchange. And maybe these people who are holding Bitcoin especially are thinking, okay, that's it. I'm going to hang on to my Bitcoin till the crypto winter is over. And I'm going to do that safely. I'm going to do that securely by custodying my own keys. Perhaps that is part of it. And what we looked at, what our CoinDesk reporter looked at, was what it is that we're collecting or giving up on these exchanges when we hand over all of this information. First of all, the important thing that Anna Baydakova has actually looked at is what do the different exchanges collect? How long do they keep it for? Who do they share it with? And to what extent are they going to let you know if there's a problem? And the answers that she found was that it really depends. And you really do kind of need to read all of those terms and conditions when you sign up for an account on a crypto exchange, because they can vary widely. And not only can they vary, but they'll vary in the amount of information they choose to give you about how they are going to handle your data. And that is a really useful thing to know when you're looking around at where should I be exchanging my Bitcoin? Where should I be buying and selling my Bitcoin? And when I do send it to an exchange, who am I actually giving it to? And to what extent is that going to be safely handled and responsibly handled? So it's a very comprehensive article that I highly recommend anyone who works with exchanges take a look at when they're in the market for buying and selling Bitcoin in exchange.
A lot of considerations there. I mean, Bitcoin was created so as to allow some anonymity and privacy in electronic money transactions. But as we learned this week, just talking to various experts, Bitcoin is not so private anymore, especially if the government or some person knows your wallet address. It can be tracked publicly on the ledger. But Anna also wrote an article about buying Bitcoin anonymously, more or less. What can you tell me here, Christie?
Well, it's an important point that Bitcoin is not particularly private. It's very transparent. That really was part of the outset underlying principles of Bitcoin was the transparency factor. Now, there are lots of advancements being made. The Taproot will help with that when it starts to be more widely implemented. There are some other interesting privacy measures happening on a tech level in the background that we haven't even seen come to fruition yet. And we're hoping to have some articles on that soon. But there are a few options if you want to buy Bitcoin anonymously. There are some decentralized exchanges, for example. You can do person-to-person, actual peer-to-peer, meet somebody in a coffee shop and buy some Bitcoin. It's a little tricky to maneuver and you have to weigh your own risks there, but that's a possibility. The other one is gift cards. There are sites that will let you swap Bitcoin for gift cards, and that requires no KYC, know your customer information to be managed. And also there are still, not everywhere, in some jurisdictions, you still have to go through KYC measures, but there are some ATMs where you can buy Bitcoin, again, at a premium. It is not cheap to buy Bitcoin from an ATM, but it's possible. So there are some options, and Anna goes into them, but they require some legwork.
Mm-hmm. Definitely. All right. Taking a look at next week. Brad, what's your markets outlook for Bitcoin?
Well, the sort of first thing I would say would be that people are really studying the charts. They're looking at 37,000 is kind of a point that people have identified as kind of a key level. If we're above that, then, we could be looking at a more bullish environment. Yeah, just right at it. I mean, but so yeah, we're kind of at this crucial level. If we close, I think it was today. If we close at the end of the UTC day today at below 37, that could be a bearish sign. But we're right at. But I mean, going back to we did have a story out today that was really smart by Helene Braun, CoinDesk reporter. And it was just about how, if this is the year where the Fed is going to be tightening and it's going to be a real reckoning for markets that have had it easy for, a long time now. And, I was just looking, Bitcoin's down 19% year to date. This time last year, we were having a big move up to new all-time high. And so it's a very different year, but if we go further down from here, stable coins might be a better spot to be than Bitcoin. But, I'm just saying, like, this kind of stuff is creeping into the market dialogue.
Yeah, we had that Fed meeting on Wednesday, and all eyes were on Fed Chair Jerome Powell. I mean, he said that they would end their bond buying program basically in March, and they would likely hike rates as well. So we'll be taking a look at that. Other stories I'm watching, Russia, the Bank of Russia is recommending in a report to ban crypto mining and trading. And you have the finance ministry opposed to that, saying that would undermine the technological development of the industry. Then President Vladimir Putin chiming in a video conference with ministers, saying that there might be a competitive advantage for Russia in Bitcoin mining, which is very interesting to see that conversation develop. Russia is home to just over 11% of Bitcoin's global mining hash rate, with over $5 billion worth of crypto transactions conducted every year, according to the central bank report. Also, President Joe Biden has said that he has a forthcoming executive order on crypto policy. We'll be watching out for that. And the continuing developments in El Salvador, the IMF is urging El Salvador to discontinue using Bitcoin as legal tender. They're continuing to negotiate with El Salvador a $1.3 billion loan agreement. Nayib Bukele, of course, very dismissive. I think he tweeted out something like, "Don't give an F," and bought another $15 million worth of BTC. So, Christy, what are you watching for next week?
Well, I've been interested in all of these sort of political maneuverings, both in the U.S. and in Russia and in Latin America, where we're looking at different countries who are kind of, eyeing things and jumping on the bandwagon. We've got Brazil making noises as well as El Salvador. And I'm curious to see who's going to be next and to what extent they're going to be next. And I thought it was also really interesting that Vladimir Putin started to, pointed out the competitive advantages of being in Bitcoin mining, because that's something we talked about last week with regards to the US and how it's useful for regulators and policymakers to think in terms of how can hosting Bitcoin mining on your own soil be advantageous to innovation and just the bottom line. So I think that's going to be interesting to watch to see what happens there. There's also a new committee to fund politicians coming up. I think it's the GMI PAC that is going to be supporting pro-crypto politicians who are running for office this year. That story came out today. It's really starting to make waves with policymakers.
Yeah, definitely. It is interesting to see that ripple effect. Earlier this week, we also spoke to the municipal secretary for economic development in Rio de Janeiro, kind of outlining the reasons why he wants to, the city wants to invest in Bitcoin about 1% of their treasury reserves. And they were inspired by the mayor of Miami, Francis Suarez. So you are seeing these network effects continuing on. All right. Thank you so much, Brad and Christie. You guys have a wonderful weekend. Thank you so much for joining me this afternoon. Always a pleasure. That was our CoinDesk Weekend Review panel with Managing Editor of Technology, Christie Harkin, and Managing Editor of Markets, Brad Keoun. All right, that's it for All About Bitcoin. I'm your host, Christie Lee, and we'll do it all over again on Monday at 3 o'clock. Also join me Monday morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.
I was posting art on Twitter. I had a physical painting I did, and I made a little website. A few months passed, and I get an email. I love your art. I'm interested in digital assets. Do you know what NFTs are? And I read that, and I was like, what?
And trying to explain to people that we can have these collectible digital assets that you can own. And then the digital assets, like game assets, is also a growing sector.
Remember the ape thing? I was like, oh my God, I need to get in.